Let's start with Brazil, because I noticed in your note you've come off of an overweight, the real. What's your thinking?
Yeah, there's so much volatility in these EM currencies that global investors are taking a pause. And when you look out, it's not just this near term, but kind of moving towards the election in Brazil, I think we have some concerns. And that's why we took that off in our global portfolio.
Well, what about EM more generally? Yeah. I mean, people say it's because of the strengthening dollar. Is that what really raised a lot of questions about EM investments?
There's certainly a lot to that. The stronger dollar brings back all the concerns about the debt picture in EM globally. But I think for us, one of the most important things is that we still see strong earnings growth for EM equities. We see better valuations than the United States. We think EM equities as a whole can do about 15% earnings growth this year. And so that's why we stay overweight in the EM equities.
It feels like there's two stories playing up in EM. I mean, one is the broader macro story about a stronger dollar and which countries are going to be less exposed to that, or their current accounts are better managed. The other story is idiosyncratic, the stuff happening with Brazil, like the strikes, the Turkey complete battle between monetary policy and then Mr. Erdogan. How do you distinguish between, what do you play? Do you play the idiosyncratic or do you play the macro?
I think there are opportunities to play some of these idiosyncratic risks from time to time, but when you have these big foreign funding situations and you have these current account deficits, then it's much harder, and those countries have less room to maneuver. So I think it's a mix of both. You can play the broader macro picture in the indices, but watch out for those countries that just have the deficits that don't allow them to move.